Good afternoon, everybody, and welcome to the Fintech Nexus weekly news show. My name's Peter Renton, chairman and co-founder of Fintech Nexus, and we're back fresh from our Latin America event in Miami. Just got back in town here in Denver a couple of hours ago. Todd has made it back to New York. How are you doing, Todd?
Energized after seeing our LATAM community in person, up close and personal, and as well as watching a little World Cup with them.
Yeah, indeed. World Cup was awesome. Kevin is still in Miami. How are you doing, Kevin?
I'm great, and it's hard to leave Miami, especially after being here with such a cool industry. Yeah.
Well, I hear you. No, I landed in Denver and it was 33 degrees, and which is like 40 degrees cooler than when I left. So, Anyway, let's get to it. Lots happening in fintech this week, but again, I think this may be the fourth or fifth time that we have led with Sam Bankman-Fried and news surrounding him, but it might be the last for a while because he has been charged in 8 counts by the US government, and he's being held in a Bahamas jail right now. He's going to be, there's an extradition hearing on February 8th, so we're not going to hear about him much, I don't think for a while, but boy, oh boy, it is getting real now for SBF, and I think for the whole crypto community. What are you guys' thoughts?
Yeah, I mean, my thinking is, regardless of, some of the other people, and hopefully there is a cascading bunch of charges for those others involved, but he's going to be held up as a poster child for this entire operation, regardless of how intricate he might, maybe what we're hearing from him, some of it is true, that he just wasn't aware. Either way, he's the one. And
ignorance is not a defense.
No. And, I think we're going to hear a lot of bluster from his camp about a variety of things. Ultimately, the Southern District of New York doesn't take cases like this lightly. Mm-hmm. They don't, order an arrest and come out with a press conference without thinking that they have their ducks in a row. They don't go through this hoopla for nothing. So I agree. We probably won't hear from him for a while. I think it'll then rev back up when he gets to the States and stuff like that. But ultimately, if the government has the goods, he's going to jail for life.
Yeah, quite possibly.
Yeah, there's no way. We were worried about how is no regulators, law enforcement, what are they doing? This is pretty clear for us in fintech or crypto. What happened here? This guy manipulated his funds and his customers and moved him around, did whatever he wanted to, and then claimed and feigned ignorance. I had no idea. He worked at high frequency trading firms, or he's been doing that for years. He knows what he's doing. And there's other people that worked along with him. But thank God they finally arrested him, I guess. It all happened so quickly this past week. I think in the prosecutors, they wrote in the court papers, he did it all just to control the crypto industry and influence its direction, even though they claimed in their defense and testimony, we had no idea what was happening, and Binance conspired to take us down. Okay.
Right. Well, I tell you.
Yeah, I thought it was, I was on the in the room yesterday at our LATAM event with there was a crypto payments panel towards the latter half of the day, and almost all of them said this is a good thing, and they, their reasoning was that this gives the industry a chance to get more serious about what they're doing, as well as the regulators and the legislators get more serious. So hopefully, for once and for all, the two are in the room together. The industry, the regulator, the industry, the legislator. Because right now, in many cases, they've been at odds. There's been some Twitter spats. There's been, some talk and some collaboration. But if this brings them all to the table to figure out reasonable, legitimate regulation where they can slowly grow an industry, I think we're all going to be the better, because I think we agree, and a lot agree, that the underlying technology is probably the future rails of financial services in one way or another. But it doesn't get there unless everyone gets serious about how the regulatory structure works, and how the industry evolves around that.
Yeah, the trouble is, I feel like the industry has lost credibility almost entirely with regulators. So they're, well, it was before
take time.
But before they had a seat at the table that was, I mean, you could argue a legitimate seat and one that was going to be listened to, and SPF was one of the biggest voices there. But now, I mean, they're just a bunch of reckless cowboys that are very immature and very unsophisticated. Now, that's not everybody in crypto, obviously, but certainly, Sam has proven that he was. I mean, either way, whether he did it deliberately or whether he did it with ignorance, either way, it is a complete ineptitude on his part.
But it does get the Goldmans of the world and the JP Morgans of the world who are using the technology probably to help that regulation along. And the crypto industry as we knew it, as it grew up from the last winter 2017 2018 to now, has probably evaporated for good. But the blockchain industry, I think, is about to come upon us. It's not going to look anything like what we just saw.
I sure hope not.
There's going to be a lot of traditional FIs that are just going to realize how much better the tech is. And it's going to take 15, 20 years. I never thought, even with the crypto industry prior to this, that there was any way that any of this would be that quick. It's just that's not the way things work when you have to go through the regulated industry.
Yeah, what is surprising to me is the price of Bitcoin has been pretty steady throughout this whole crisis. Like,
it's true.
I mean, it went down a little bit when FTX kind of imploded, but even with the arrest and everything else this week, it's actually gone up. I mean, Kevin, any thoughts on the price of crypto?
The price is going to change again and again, and I don't know if it's the complete end of people blowing up over crypto. I think the next bull run is going to look different, but I think we're just stuck with this cycle. And I think, I swear, there's going to be a crypto YouTuber that's going to try to run for president, and people are going to take him seriously in my lifetime. It's just like it doesn't go away. I thought it was going to go away. It don't. I think it's true that blockchain is clearly here to stay. It is. I don't know. We're going to see how institutional and like enterprises and even countries use it as their transactions and runs everything. But I don't know. I don't know if there's ever going to be like a Bahamas-based exchange that is basically a gambling company.
Right. And I think that's
it's not really. I think it is true that regulators are now like, it's not really fun in games anymore. Like you can say Wild West and like, oh, no one really regulates it, but it's not fun. No. I'm surprised consumers, and they're always going to get caught up in stuff like this, but they need to be protected because they don't know. Right. Even if Mt. Gox gets hacked or something, or internally hacked or whatever happened, it happens again and again, and people always get sucked into it because there's like this enduring magic to it.
Yeah. Anyway, let's move on. There was other news this week, and this was an interesting piece. I missed this when it first came out, and I think we all did. That this was at the Singapore Fintech Festival. It happened right during the whole FTX blow up, so it's probably easy to miss. But the United States, is developing a bank-to-bank digital currency. The New York Fed announced this wholesale CBDC, codenamed Project Cedar. And it's interesting because the goal of it is to reduce settlement risk in cross-border, cross-currency transactions, because we know that the U.S. currency is sort of the reserve currency of the world. And this article in Atlantic Council said that 88% of all transactions are in some way denominated in US dollars. So if we can do cross-border settlement directly on the blockchain without any kind of US dollar intervention, that's not good for the US dollar. So this is I feel like in some ways this is a defensive play. And it's a totally different to what like Project Hamilton was, which was more of a looking at a retail CBDC. Super interesting.
Yeah, I mean, to me, this is kind of what we're gonna continue to see is innovation like this that is not sexy in any way.
No.
But ultimately,
Project Cedar.
They're trying to make it sexy.
But ultimately, it ends up making the system as a whole run on rails that are significantly faster. Settlement times and days and weeks is gone, and it gets to near real time or real time. And products eventually become cheaper when the retail side gets involved. But them having an understanding of how they make technology like this work with big banks on the back end um, gives them also a better understanding of then how to cascade that down into a retail product eventually. So to me, I think this is the way that we're going to see the industry go for a while, and we'll see kind of pockets of this speculation and crypto kind of bull runs. But I think to me, this is the better and more interesting thing long term to keep an eye on. Stuff like this.
Yeah, and for all we talk about crypto, blockchains, and database technology, the world has run on digital databases, like in number systems, since even before I left high school, or before I even left middle school. There was a tech revolution in like high frequency trading and all this stuff that ran how we transfer currency in a faster way. If this is the new evolution of it, it makes sense for it to be in, I don't know, an institution like the Fed that can like top down make sure it's all safe. I liked the coming from crypto or fintech like background. It's cool to see that a lot of transactions in between companies or entities or countries are like using the dollar as an intermediary, where they'll have it in whatever Swiss francs and then change it to the dollar and change it to something else because of its stability. That just makes sense for a stable coin to exist, doesn't it? That's what we've seen it be used as in exchanges for crypto, almost as like a sort of test case. And it doesn't always go well, but if the Fed is backing it, and you're like, if you're betting against the United States like Fed and the United States currency, you're betting against a lot of like the Western world, you know? I mean, I don't know. I hope that they find a good system. It's interesting that it's using blockchain, and I think Project Hamilton didn't. They said they could move it faster without using blockchain and whatever other database tech they were using. But I'm excited to, even though it is boring, I'm excited they beefed it up with a cool project code name. And I'm excited to see where it's going to go.
Yeah, it's going to be super interesting to watch this one develop, because this one, it's all about bank to bank. It's happening in the background. And
ultimately, isn't this, in the end, the best way to fight fraud? Because fraudsters in part, they do so well because of that lag.
Yep.
That there's something that happens, a payment is initiated, and then there's this lag of days. And if that lag is gone, yeah, there'll still be fraud. But maybe they capture fraud significantly quicker. Maybe they can reduce fraud. To me, I think this is also a step in the direction of just making things safer between the banks as well.
Yep, for sure. Okay, moving on. I want to talk about a hearing in the Senate Banking Committee this week, because this is something that I feel pretty strongly about. This is talking about the SBA and their 7A program. They're looking at admitting fintechs. They've had it set on 14 non-bank lenders since the 80s. They have had that limit in place, and they're talking about expanding that limit, not a lot, just by 3 initially, adding 3 new non-bank lenders.
Really keeping up with the times.
Yeah. But I mean, even with that, I mean, because it's a whole PPP fraud thing, I think I'm going to have to write a piece about this, because I feel like it's just so overblown. There was some fraud by fintechs. Does this mean that all fintechs are fraudulent and they shouldn't be in the 7A program? Absolutely not. But there is, you look through look, there's an American Banker article about this hearing, and it just is all about how, fintechs, PPP fraud, not good. We shouldn't have fintechs in here at all. And disagree.
This goes right to the heart of how Congress does not understand fintech at all.
Mm-hmm.
And doesn't even understand the program that they enacted. Because they're the ones that pushed PPP through. They've
forgotten. They've forgotten.
And
like they don't know that.
Didn't come to the realization that fraud was going to be a part of the program.
Yep.
And if the banks shut out customers that were not their own, there was only one type of firm that was left holding the bag, and that was fintechs.
To 90%
fintechs were it was insane that fintechs were left holding the bag of all companies that they themselves did not know very well.
Right.
Because the banks refused to do it. And if the banks
couldn't do it. They weren't physically capable of doing it in time.
But if the banks served the exact same customers as the fintechs during PPP, the fraud would look almost identical across banks or fintechs.
I'm convinced of that. Yeah.
Yes. Maybe a slight percentage point different if the banks are slightly more conservative. The point of the program was speed. It was speed. And millions of businesses and jobs were saved.
Yep.
And they're focusing on such a small fraction of it, it just makes no sense and goes to their misunderstanding of the space.
Yeah.
Yeah, and it's ridiculous. Banks were only working with their previous clients, which we already know is incredibly underserving of the small business community. We know that. That's why fintechs exist. And when the government prints a ton of money and says this needs to be handed out ASAP, or we're all going to go out of jobs and work, it's all going to fall apart, hand it out as quickly as you can, and they hand it to people that need to take on a ton of new customers that they haven't already before, and all the big institutions refuse to do it, and they just blame them once it's over, even though they were the ones that designed the program. And now to only limit it to 3, there was dozens and hundreds of fintech providers that help facilitate these free government loans, and there's a lot more than 3 that are capable of underwriting in a safe enough way that they're not handing it out to fraud. This PPP and the EIDL and the government surplus, I don't know. The emergency programs that they put through for COVID will be investigated for years because it was billions and billions, more than we even know, of fraud, wide scale. And it's not 100%. It's not because of the people that were helping facilitate them alone. It was because of everyone was dipping their hands in and taking advantage of a crazy program in a crazy time. I mean.
Yep. No, it's you're dead right there, Kevin. So anyway, let's move on. I want to talk about Figure. This was late last week. Just missed our news show, but we had a Figure SPAC that's been in market for quite some time, and they actually have to get an extension to get this thing closed. But they've signed a letter of intent to merge with an as yet unnamed bank. All we know is that they have like a $3 to $5 billion loan book focused on home loans. Mike Cagney is chairman of the SPAC, and so clearly, I think the idea here is going to basically merge with this bank, and I imagine introduce new blockchain-based technology into the lending process of this bank. So, but clearly, obviously, the bank wants to go public. They wouldn't be doing a SPAC if they didn't want to do that. But it's a bank holding company. I don't know if this is. We don't really know any of the details, but what was sort of reported in another American Banker article. But super interesting that Mike Cagney's everywhere, isn't he?
SPAC's making a comeback.
Yeah.
I mean, it's this is kind of the the stuff I was talking about earlier. I mean, this is where I think the space is going, and this is the long-term most beneficial place that the space will go. And there's no one that, as far as I know, there's probably no one smarter in the space than Cagney.
Mm-hmm.
And just the way he thinks about these things, his knowledge of capital markets, his knowledge of banking, on top of his knowledge of crypto and blockchain, I expect this will be quite the success.
Mm-hmm.
Yeah, it's cool to see. It's nice. I guess they're waiting out there was a crazy SPAC market last year, so it's like they're distancing from that, and they need to extend, which is probably a good idea. I don't know. Well, how many companies speaking here at LATAM just this past week have said you need to offer a wide range of products to your customers that fit all together like a delicious, I don't know, sandwich, taco, I don't know. How many companies did we talk to that said something like that?
Right.
And this is exactly what Cagney's sort of leading the way in doing.
Yep.
One of the
the thing about
figures in the fintech space.
Right. The thing about Cagney is he goes broad and deep. So it's like, it's not just, he goes, like, he's got such a sort of I feel like he executes so well, and that's why he's able to do so many things. Anyway, moving on. Checkout.com were in the news this week, and I actually found out this news from Steve McLaughlin when he was speaking on our stage, who we're going to talk about in just a second, when he said that he saw that Checkout.com had written down their value. This is just their internal valuation from 40 billion down to 11, and it's really done just for so the employees can restrike their stock options. You don't really want stock options when your company's worth 40. And it's not worth 40. There's no one else that's maintained a valuation like that. So 11 sounds a little bit more realistic, down close to 75%, but still, may even still be a little high, but compared to their comps. But still, it's sort of, they were like one of the last ones to, that had this massive valuation that have now been written down.
Yep, it's in some ways, I think, the readjustment is really kind of where a lot of these fintechs actually are, versus where we thought or where they all thought they were based on an investor appetite during 2020, 2021. So, for some companies, I'm sure the employees are in a bit of a more precarious position than how Checkout has opted to go about it. But I think fintech is still going to be grappling with these types of issues for a little while. And hopefully by the end of 23, we kind of see maybe the upswing coming. But I think we're still in for some pain over the next 6, maybe even 12 or more months.
Yeah, it's a wild time to begin studying the fintech industry, as it sort of blew up and then it's now in its laid back holding pattern, it feels like. I know Stripe lowered.
Winter is here.
Winter's here. And it's warm in Miami, but otherwise it is raining cold. I know Stripe lowered their valuation from 95 to 74 billion. They said in the article, and that's a lot different than like a 40 to 11. But if you can do that without firing a lot of your workforce, I guess
the Stripe did do layoffs, but not dramatic layoffs like some of the other companies, and they're all they have a very good model for they're making money on transactions, and so that is that's a good place to be. But anyway, I want to move on. Now we're going to end it today with talking about some of the things we heard at our Fintech Nexus LATAM event. Kevin, you wrote this story about Steve McLaughlin. He was on stage with Mike Packer from QED. Steve McLaughlin, obviously the CEO and founder of FT Partners, sort of the leading boutique investment bank in all of fintech. So tell us about your article, Kevin.
Well, it was a brilliant conversation. It was one that I was happy to be front stage and center to watch. It's basically, they tried to not make it about doom and gloom, because it's a merger, acquisition, and deal making facilitator, I guess, that has helped with funding rounds, helped with partners buying other partners, and they're trying to wade through this winter that has finally come. I don't know. It was interesting to see. He was just giving warnings to the crowd. He was saying, I know people think, it's consolidation time. But he said in his 20 years, his 2 decades of experience, he has not seen that many giant banks or giant, like safe traditional institutions that are going to be around because they're slow and big for a reason, I guess. He hasn't seen them really pick up the starting up and coming fintechs or tech companies that often. Like New and PayPal aren't necessarily going to buy everyone, even though that's what I guess some of us, we know consolidations is coming, but he's saying you have to wait for that. And he's saying VC is going to sit on its haunches with its dry powder for as long as it needs to, basically. So get ready for really buckle down for 12 months or so. I don't know. It was an awesome conversation. That McLaughlin and Packer, they know what they're doing. And it's just cool to be able to see that like on stage so close.
Mm-hmm.
Yeah, it's. I think the last part is in kind of the notes that we took there. The bank piece is kind of most interesting. That even now in LATAM, where you've seen this kind of proliferation of, even the large ones like Nubank and Clip and others, and then you have the early stage space, which is very robust, that banks are still not looking to get technology that's significantly better than where they're at today. And I think part of that speaks to how banks view the markets that they're in that the fintech and the bank customer are not the same. In many ways in the US, the fintech customer and the bank customer, except for the very top of the market, the fintech and the bank customer are almost identical. Chase is going after the same people as other fintechs. Yeah, there's some differences, but in these markets, there's almost no incentive right now for the banks to change their strategy because they make so much money on the customers they have. And the fintechs are bringing in the people that in many ways are under or unbanked. And so you still have this big gap within the LATAM market, which will eventually close. I think it's so interesting, even in these times where they can probably buy really, really cheap tech, that they're still not even looking to do so.
Yeah, that's the thing that's interesting. I mean, I always feel like we're on the cusp of an M&A boom, and
always
it hasn't happened. And 2023 is going to be interesting because there will be some fintechs that are going to be for sale. I mean, there are some right now. I heard some people talking, chatted with a few people in Miami that talking about that they've heard of some of the neobanks out there that are currently for sale. But they haven't found a buyer, so we don't know anything officially about it. Anyway, I want to move on to Pix because I thought this was just such an interesting conversation. We had one of the founders of Pix. If you don't know what Pix is, you should. It doesn't matter if you don't like Latin American fintech.
Yep.
You need to know what Pix is about. It's the biggest success story, I would maybe argue, in the history of fintech.
Outside of China.
Yeah, outside of China. Yeah, it's
just because China's scale.
Run for the money of China. I think
1 billion people using fintech products. Yeah, I think still wins.
So you got a population of what, I don't know what it is in Brazil, 220 million or so.
I think that's
64 million people in Brazil have done their first digital transaction in their life. So you're talking about more than 25% of the population. If you take out adults, it's more like probably 45% of the population, the adult population, have done a digital payment for the first time because of Pix. And it's real-time payments. It's a super easy to use app. And you now have, Brazil has gone from an unbanked population to a banked population in 3 years. And now Nubank has helped with that, and Pix has helped with that. And it's a staggering story. And Pix is now going to be used elsewhere. I feel like it was my pleasure to interview Carlos Brandt, the head of Pix, and he's just I think they've created a juggernaut.
I think outside of Argentina, because the World Cup, I think the next most popular word at the event was Pix.
Right.
And I think it's become a verb in Brazil. But I think it is something that governments in the region have already started looking at, and governments around the world should look at, because of how seamless and simple they've made the system. And to be honest with you, it's infinitely better to come top down the way they've done it than have 45 other systems that don't interact with one another. Yes, this does hurt some companies that were working on this technology, but some of those companies have shifted their focus to other areas that can then build on top of or in conjunction with Pix. And it kind of lays this new foundation for an entire economy. And to me, the next step eventually, hopefully, would be how do you get something regional where Pix goes into Mix, in Mexico version of it, because the version Mexico started with doesn't work.
Yeah, the Cody is nothing.
So
real flop.
I mean, it was a phenomenal not only conversation but the innovation. I mean, not one person at the event could not rave more about anything else than the success of Pix, and those are non-Brazilians too.
Yep.
I just can't believe the numbers. 200 billion monthly processing, 75% of the adult population with an account. And so he said, you were talking about the top-down nature. So he said any bank or the central bank made it so that any bank that had over 500,000 customer accounts would have to join from day one. So you're right. So they didn't have a ton of different enterprises competing with each other, which, as we're seeing now, as the other conversations talked about, it's hard to choose one out of so many fintechs that are all building what is a completely obviously necessary product when there's so many of them. I mean, it's amazing. I can't wait to see when it's regional and when it's across all LATAM.
Yeah, the interesting thing, we're running out of time, but it's it has resulted in a downturn in card usage. And I was actually talking to one of the major card networks at our event about this topic. And this person said that it's bad in the short term. Pix is bad in the short term for them, but they think because it brings more people into the digital system, it's going to be good for the card networks in the long term. So,
yeah, I mean,
anyway,
it's kind of like where buy now, pay later is becoming. It's an option.
Right.
It's an option.
Yeah,
you
it
can
brings
use
more
the card.
People now realize digital payments is actually pretty efficient. Better than going to the store and having to fork over cash. Yep. Anyway, we are out of time, so we'll have to thank you all for watching. This is going to be our last show of the year. We'll be back in 2023. We'll be covering the news, and I'm sure it's going to be a year that has been just as interesting as this year. Hopefully, it'll be different. Every year is.
Yep.
Hopefully, there won't be any massive crypto exchange blow-ups, but that's certainly dominated the time. But anyway, wish everybody a happy holidays, Merry Christmas, Happy New Year. Enjoy your break, and thanks Todd, thanks Kevin.
Thanks Peter, thanks everyone. Enjoy the holidays.
Happy holidays, guys.